Yves-André Graf from the One Chair Pad and Chase Palmieri from Savannah. How you doing today, guys?
Doing great.
Yeah, bullish.
Great. Bullish. Yeah. Price check 62K. Markets are melting down. Yeah, last week we were talking about the MSTR capital stack, Chase, and you kind of hit on some of the value props of those other preferred equities that strategy has. Do you want to hit on this one for us and share, maybe update us on the latest news on where your head's at with that?
Yeah, sure. So I think, we'd been talking on this show, but also in our little private chat about what to do with my dad's capital as he looks for retirement income, fixed income. And he himself is a Bitcoiner. We own MSTR and have since basically that first $250 million buy. So we're very comfortable with strategy, very comfortable with Bitcoin. So he's very comfortable with the credit worthiness of these preferreds. But that still raises the question, which one do you buy? Which is the best hold, and when do you enter into that trade? And we'd been talking about how SATA had kind of edged its way into the discussion in recent weeks because of the daily dividend nature, because of the no debt, because just less surprising decisions from the management team, more clear direction on USD reserve and all of those aspects, whereas strategy seems very willing to kind of put on its hedge fund shoes and pull whichever lever it wants to at any time, surprise the market, keep people guessing, keep the stock interesting, as Saylor likes to often say. And so what we ended up doing with that capital, and I'll explain why, because this will probably come as out of left field, is we bought STRD. So the lowest pref in the preference stack that strategy has to offer. So this is not financial advice, of course, financial entertainment, but the way that I think about this is I think back to the movie The Big Short. And yes, real life is not a movie, but that movie is based on real life. So there are some interesting parallels to draw. So if you remember the very famous scene where Ryan Gosling is in there pitching Steve Carell's fund, and he's got the Jenga blocks, and it's AAA, AA, triple B, double B, B, and he's talking about how he's basically pitching them on a credit default swap, saying that the credit worthiness of these mortgage-backed securities are no good. The housing market's going to crash when it goes from something like 4 to 8%, and it's on its way there. And they were essentially taking a bet. Everybody in that movie that made out in the end was taking a bet that the credit was not as good as it was being presented as, because the credit rating agencies were just basically rubber stamping any of those securities that came through the door. So if you remember at the very end of that movie, and I know I'm going a little bit long here, sorry, but it's super interesting. If you remember at the end of the movie, there's a bunch of the main characters who make out well on the trade, right? 10 to 1, 20 to 1 returns. But there's those two guys from Brownstone, and they're often joked in the movie, they're called Brown Hole, because they're just these two kids out of college who needed to use Brad Pitt's character just to get them a seat at the trading desk. And whereas all these other folks were betting against the triple Bs, the double Bs, and the Bs, they were the only ones that decided to bet against the triple As, basically saying, hey, this is a binary thing. If the Bs and the double Bs and the triple Bs collapse, then so does the triple As, but people just are afraid to bet against the triple As because they assume, oh no, those are the more credit worthy. But if the whole structure is going down and it's a binary bet, then you get greater multiples. You get greater return by betting against the AAA. And so to the same degree that they were betting against the creditworthiness of those instruments, I'm making a bet that strategy's creditworthiness is better than the market is giving it credit for. And so if you take the reverse, the equivalent of betting against the AAAs for the higher binary return is similar to betting on STRD, the lowest pref in the pref structure, because I believe as Bitcoin appreciates much further than their cost of capital that they owe on the dividend obligations, that even something like STRD at the bottom of the preference stack is going to be massively over-collateralized, massively investment grade over the long term. So that is kind of maybe us being a little too cute by half, as they say, but I believe at an over 16% effective yield at a $62 STRD entry price, which is what we were able to get, that not only do we have a fixed effective yield, because that's another thing that's different than SATA and STRC, is that if rates do come down and these instruments do become seen as more creditworthy over the long term, you might expect that the yield comes down with it. But we effectively just locked in an above 16% yield forever. And that's also not to mention the fact that trading at $62 per STRD in 4 or 5 or 6 years, and again, this is a super long-term hold, this is my dad's retirement, fixed income, I believe that we're going to see principal appreciation as well, because as all of these prefs become super creditworthy, then STRD as well should begin to trade closer to 100, above 100, which it has in the past. And so I believe we'll probably see some principal appreciation in STRD, as well as just a really attractive, in this moment in time, above 16% effective yield. And for that, I think of this as kind of the reverse credit default swap, very similar to like the brownstone trade in The Big Short.
Quentin, what's your take? Or Yves, sorry, what's your take on that?
Yes, so much to think about. For sure, one thing I'll comment on is again regarding the Big Short. I think those two college students are probably the most overseen characters in the whole movie. We've seen plenty of memes on the Brad Pitt character, the Steve Carell character, and so on, but not so much these two guys, and actually make quite a nice winning as well. So that's one thing on the movie. But regarding to what Chase says, I completely agree. Maybe one caveat compared to obviously SATA and STRCs, as Chase points out, is obviously because that's more of a long-term play for his dad, and he expects some appreciation. I still expect some volatility in the near term. I still think, for example, a SATA would be less volatile in a shorter term. So again, when you're looking at these products, make sure that you have your duration view also aligned with what you're getting, right? So that's one thing. So it doesn't mean that it works for Chase's that it's going to work for yours. So for example, I hold a very tiny amount of SATA, but that's because I'm doing a carry trade with a bit of leveraged amount on my portfolio. Do I want to risk the volatility with an STRD product? I wouldn't be so comfortable, to be honest. I'd rather hold some STRC or SATA for this type of trade. And again, very, very small amount, just I'm testing things out. So for me, an STRD is not really what I'm looking for. So again, yeah, just watch out, or make sure that when you choose one of these products, because all of these products have very specific purposes at the end of the day. So when you do that, make sure that you select the right one.
Yeah, and let me actually give the downsides of STRD, just to be super transparent on it. So STRD pays quarterly. So unlike SATA, which is daily, if you're living off your dividend and you need money coming in the door at high frequency, whether it's daily or twice monthly with STRC, then you might have to choose one of those instruments, even if you like STRD for its other reasons. But STRD only pays quarterly, and it's non-cumulative. So strategy can decide without punishment, without accumulating the obligation to just not pay the STRD dividend. Now, in my opinion, I think it's highly unlikely, one, because they're sitting on the Bitcoin value, but two, if they were to not pay the STRD dividend, that would obviously affect all of the other dividend obligations across all the other prefs, because the only thing scarier than, liquidating half of your USD reserve and selling your Bitcoin in the same 14-day period would be to actually not make good on your first dividend obligation. So again, I believe that STRD is definitely the most trust me bro of the prefs. And I acknowledge that. But again, to me, this is a binary bet. Either the company aims to be the most creditworthy issuer in the world based on a massive balance sheet of Bitcoin collateral, or it won't work. So to me, it's fairly binary. But the benefit, and I guess just for people who don't know, obviously I'm an MSTR shareholder. STRD sits just above MSTR in the preference stack. So, I am obviously optimizing for the riskier of the products in Strategy's offerings, but that's just my appetite for this. But obviously, if you were to own something like STRF, you could really sleep well at night. You might not every year outperform stated inflation, but you're going to sleep well at night knowing you're the first to get paid out in any kind of a liquidation event, which again, I don't expect to happen. But very last thing there is STRD is still a preferred. So if you're worried that the MSTR shareholders are going to get burned, left holding the bag, well, I think you at least have to acknowledge that there's enough Bitcoin on the balance sheet to pay off the entire preferred stock shareholders. And STRD still sits in that preferred. So STRD would still, in a liquidation event, hypothetical, get paid out before common. So there is some rest assured there.
Yeah, makes a lot of sense. I'm having a bit of connection issues, guys. So if I drop off, please carry on. Yeah, I'm trying to kind of show that capital stack here. Just give me 1 second. Yeah, we're just gonna share credit metrics here. But yeah, really fascinating. The different options that are there. For someone like you said, Chase. Like if you believe in the model, it's like all these instruments should perform with. There are varying risk factors, but if you're looking for fixed income, yeah, I mean you can locking in a 16% yield on a product that is over collateralized is just breaks the mind. There's nothing like that in the marketplace, certainly. And it is a very binary bet. But yeah, just looking, yeah, the total preferred stack is just $15 billion, $15.5 billion that they've got there. And of course, Strategy have 850,000 Bitcoin. So where's the current value of that? Yeah, $53 billion worth of Bitcoin on the balance sheet in a bear market, at cycle low prices. So you do the math. There's a lot of over collateralization, so to speak, there. Yeah, just really interesting thinking about the yield of, I guess all of these products. STRC, of course, is, what a deal even at that. That traded, I think it was after our stream last week, down to $82, $83 and hit its kind of all-time low even before, its initial offering. Today it's trading at $88 with that 11.5% yields fixed to the $100 par. The effective yield's 13% on that. So I mean that's also like really attractive. If like Eve, you said, there's like, you're worried about, a little bit more of capital preservation, but yeah, just really interesting stuff. I think Strike makes a lot of sense. I've bought some of that in the past. Of course, that's got the redeemable option for MSTR common shares, and it's not really trading at much of a premium because it's so far out of the money on the redemption price. But yeah, really cool stuff. I think STRF, same thing, that traded up to what, $118, $120 in the bull market. So it'd be really interesting to monitor all of that. I did want to take a look at all of the current prices on a chart here. Bring this comparison tool back up. So yeah, I mean you've got these trading all along the stack here. You've got SATA, which is interested to get your guys' take on why has SATA been able to hold so much closer to par than STRC has? Is it solely a function of the daily dividends? Is there just more inertia behind SATA right now? It's trading $96, $97 in that regime today, and of course the yield on that is 13%. So I think extrapolating that to about 13.4% effective yield versus a 13% effective yield on STRC. What's behind that stuff?
I like what British Hodel said in one of his recent videos, which is a reminder that narrative drives liquidity, and then until liquidity reframes the narrative. And I think that right now Strategy and Saylor are catching all of the bear market arrows, whereas SATA is basically offering the same thing, but just going a little bit less noticed and catching a little bit less of those bear narratives. And so I think it's that, but also a little bit of strategy's own doing. You know, as an MSTR shareholder, I am fully capable of criticizing the company's decisions when it makes sense to. And I think liquidating half the USD reserve was problematic, as we've seen from their really quick about face, raising 300 million just this last week. And I think 500 or 600 million over the last 4 to 5 weeks. So that was a problematic decision that scared off a lot of the fixed income investors that are in it not for Bitcoin gains, but for reliable fixed income. And to know that that fixed income will be there for the future. Because again, a lot of these fixed income investors, if they were short term and they were focused on growth, they wouldn't be buying fixed income. These are people who maybe they're parents of Bitcoiners, or they're people who just are looking at, you know, the collateral base and saying, yeah, I might not believe Bitcoin is going to 1 million, but even if it just stays at these levels, this is a sustainable high yield rate. You can't scare those folks. Like, those people are not high conviction. You will shake them out. And I think SATA has just done a better job of hand holding.
Yeah. It's interesting. I want to bring up a tweet from Adrian Morris, kind of on the topic of creditworthiness and cash. It took me a second to realize he was quote tweeting something from last year. I was like, what's the common thread here? But Adrian said the creditworthiness of these Bitcoin treasury companies is tied to BTC, not their cash reserves. That said, the importance of having a cash position for MSTR and other Bitcoin treasury companies isn't just about paying dividends, it's about optionality. Dividend payments, cash secured puts to buy Bitcoin, the ability to pay down debt, not just creditworthiness. I don't know, like maybe it's semantics, but to me it really is kind of the creditworthiness, because, you know, again, maybe it's just a semantic thing, but like, you know, having that investor trust from those fixed income people is a component of creditworthiness. You know, there's creditworthiness, of course, to credit rating agencies and other firms looking to invest in your company. But I'd be curious your take on that, Yves. What do you think about is the cash position, is that runway important for the creditworthiness of a Bitcoin treasury company?
I think it is. One of the things with this Bitcoin treasury, specifically Strategy, Strive, and potentially soon MetaPlanet, is when they're issuing these preferreds, basically what they're doing is they have one foot on the fiat system, and they're already kind of with one foot in the Bitcoin system, right? So you need to appease both investors, like the Bitcoiners on one side, the ones that are looking at it from a Bitcoin lens, right? And potentially these guys are looking more at the Bitcoin per share and things like this. They obviously are not super keen on USD reserve cash. But on the other hand, you have a bunch of people that are not Bitcoiners and that are looking at the yield, and they still thinking cash flows and what we've talked many times in our previous discussions, right? That they still look at the fiat lens, and from a fiat lens, having this USD is what really matters. They might even oversee the 800,000 plus Bitcoins that Strategy has, unfortunately, and they're a bit like the credit agencies, right? They probably count that as a zero in the balance sheet to some extent. And so that doesn't really give them any comfort. So when they're looking at this, definitely there's, for investors, the credit worthiness of having this USD reserves matters a lot for Strategy and Strive, considering that their main focus is on these products and having access to the capital markets. Their business operations are not yielding enough cash flows to sustain the dividends of these products. So an investor that looks at this, they cannot look at that. And that's also what's interesting. And maybe I can talk a bit about MetaPlanet in this case, right? Because in Japan, what they're doing is they're building these business operations to be able to have some cash flows and sustain the dividends of their hopefully future preferreds. And I believe even it's a regulation in Japan that they would need these cash flows in order to sustain those preferreds, right? And again, that's looking at from a USD or fiat lens. And despite having also 40,000 plus Bitcoin, probably the regulators and the investors that are looking at it from the fiat lens consider this as zero or almost zero. So definitely very important to keep in mind that this USD reserve is not there for nothing, right?
Yeah, yeah. And do you buy Chase's claim that I guess that STRC is really taking the hit because it's kind of the big player in this market, and
So
does that explain a lot of the outperformance relative to SATA recently?
I think that, again, coming back to various factors, so Chase already mentioned the depletion of the USD reserve. For sure, that didn't help because we saw already some weakness on STRC when that happened already a few weeks ago. And SATA has been stealing some of the show with the higher yields, the daily dividends. I think daily dividends might be overseen right now, but I still think that makes quite a big difference for certain investors. And that's going to be, I think, the standard coming soon. And I expect also STRC at some point to move ahead with something like this, hopefully soon as well. Another aspect potentially that is interesting, and I don't know if you guys already heard the hurdle rate with Jeff, Matt, and Ben, where they mentioned actually that STRC was overlevered, but not even on the DeFi, which was kind of our initial fear, but more on the TradFi side of things. And it was a deleveraging on the TradFi, and that obviously followed from the FOMC meeting the previous day, right? Because of the hawkishness of what the Fed chair said. And I thought that was interesting because that suggests probably that a lot of people are actually looking at STRC and levering on it and are not so focused on SATA as well. I mean, STRC is the bigger product, clearly, so a lot of focus is still on STRC, and that's what may have caused as well the deleveraging. And yeah, that's all these factors put together that kind of just shows what happened last week, right?
Yeah, definitely. I am curious, it does seem like, so Strategy bought, I think, 530 Bitcoin or so, 500 some Bitcoin this week, and then they increased the reserves, or the runway, basically the dividend coverage from about 7 months to, I think it was 9.8 months roughly, almost 10 months of dividend coverage. Is that enough, Chase, in your mind? Like if they bring that back to a year and a half worth of dividend coverage, is that going to automatically bring it back to its peg? Are they kind of in this place where they have to increase the yield on this product as well in combination with that? But like I'm curious your sense of where they kind of either restore trust or what that right amount and right balance of a USD reserve is for. Do you think Saylor views that USD reserve as important for dividends himself? Because I posited in a tweet earlier this week that I'd like to see them ramp it up, and even though it's a bear market, and you'd like to buy the dip, but ramp it up to 2 years worth of dividend coverage and maintain some optionality of keep maybe 18 months as a hard and fast rule of dividend coverage, but optionality through bear markets to buy the dip, or to buy back your shares, or some other mechanism when Bitcoin does have its bottoms. But I think now's the time to slowly build that reserve. I don't want them to do it all at once, but as a shareholder, I'd like to see them extend that runway.
Yeah, it's interesting. I mean, I'm not an STRC shareholder, so I can't. It is difficult at times to kind of put myself in the head of somebody who's buying that product. Does the USD reserve matter? Like, Brian Brookshire had this interesting post where he basically proposed that the ideal structure for a digital credit issuing company is just the Bitcoin on the balance sheet and the digital credit stock ticker. No USD reserve, no other preferreds, no converts. And his thinking was that you need to get the fixed income investor to just look at the collateral base and feel comfortable that when you need to, you'll sell it down to make good on obligations, but that the collateral base is always expanding in nominal number of Bitcoin and Bitcoin value over long periods of time, and that this USD reserve is just kind of a drag on the capital structure. It frustrates the common equity shareholder, who you also need to try to keep happy in this structure. But as much as I agree, like logically, first principles, that is the best. If you could train the fixed income investor, it's just, it's not, they're not Bitcoiners. Like if they were Bitcoiners, they would probably just be buying Bitcoin. So you need to give them a USD reserve. It needs to be an impressive amount that just kills the Bitcoin price volatility conversation in its tracks. Is that 2 years? I think over the long term, it's one full cycle, 4.5 years of dividend obligations. Now, I understand that that's going to be on an MNAV basis dilutive to Bitcoin per share over the period of time at which they're building up that reserve. But on a go-forward basis, to just keep pace with the STRC growth of the obligations should be fairly nominal. But yeah, like for the next couple weeks or couple months, I would expect and I would hope that Strategy would rebuild that USD reserve, but also not use it in the way that they did by paying back the converts. So if they're going to use it in the future, it should be either not touched, in my opinion, or perhaps used to actually defend in some kind of a downward liquidation, the STRC price remaining close to par, not peg. So perhaps that USD reserve can buy back some STRC shares when it's trading at a discount. I think that that's the kind of use of the USD reserve that might actually be acceptable to an STRC shareholder. But once you start paying off other holders of other notes in the structure, the STRC shareholders are sitting there saying, whoa, 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 that was promised to me, or at least heavily implied that that was for me. So yeah, I mean, I think the USD reserve has to be there until the whole world is treating Bitcoin as the unit of account. There will still be a place for fixed income in that world, and maybe then the USD reserve can be sold off for parts, and we can just sell 32 Bitcoin and acquire 1,500 Bitcoin a month, and people will understand the concept of being a net buyer. But until then, you got to make them happy. Like if you had a digital software product and for some reason all your users were still on Firefox instead of Chrome, well, I'm sorry, you got to make a Firefox browser extension. Maybe you didn't want to. Maybe you think people should be using Chrome. Maybe they should be using whatever the new decentralized internet is at the time. But like, you got to meet people where they're at and bite the bullet. And right now it looks like Strategy is biting the bullet by $300 raised. I think it's worth noting that a lot of people are saying, oh wow, SATA bought more Bitcoin than Strategy this week for the first time ever. It's like the flippening of digital credit, right? But the reality is that's because they used 300 million of it to add to the USD reserve. If there's still the capital raising beast in this market, and will probably presumably hold on to that mantle for many years, maybe decades to come. But this week they happened to allocate to USD, whereas SATA was all towards Bitcoin. And so you did have this interesting week where SATA actually bought more Bitcoin than Strategy.
Yeah, really interesting. It is tricky to, having to navigate the different liquidity environments in capital markets, right? It's like hopefully when these convertible notes come due, Strategy's still raising massive amounts of capital that it can, and yeah, I think just building that cash runway, just logically makes more and more sense. In your situation where you're saying having a full cycle's worth of dividends, maybe it's 4.5 years there eventually, Chase. What's a realistic timeline that you think it's reasonable the Strategy could build such a USD war chest, I guess?
So I was thinking about this, and I would maybe pose the question to you guys as well. Is like, on an ideal basis, would Strategy be issuing more STRC in the bear and more MSTR in the bull? Or am I thinking about that wrong? But because in my opinion, you want to issue as much digital credit here when you think you're going to rebound back to previous all-time highs and basically cover the next 4.5 years of dividend obligations just in one go, and make that fiat-based liability totally insignificant on the balance sheet. So do you want to issue as much STRC here at the lows and as much MSTR in the bull when your MNAVs are probably running back to, maybe closer to 2, maybe even above 2? That seems to make the most sense, right?
It does, but like I said, like capital markets are tricky. Like I'd love to see, strategy. I'd love to see STRC trading at 100 right here, and strategy able to, ATM like they were 2 months ago. So there's no guarantee that'll happen. So I mean, your larger question is, does bolstering that USD reserve really quickly now by issuing? It's reflexive, right? They've got to issue common stock right now to increase that war chest, which feeds back into the, I guess, the investor confidence and stress. So like I'd love to see them levering up or issuing as much digital credit as possible, but it's just a tricky situation with, I think, a confluence of factors.
Yeah, I think you're right. I think you got to water down MSTR shareholders a little bit to build back up the USD reserve to the point where it increases the confidence of STRC buyers. And then the success of STRC being able to acquire more Bitcoin for strategies balance sheet in the bear brings more confidence to the forward-looking common equity again. So yeah, I mean, I think they basically have to get the flywheel turned back in the right direction, because tapping half of the USD reserve at least put on the brakes of the flywheel, and they need to get that, moving again.
Yeah.
Yeah, I mean, they can do that, and obviously they're doing all they can to reestablish this confidence. But at the end of the day, I think it's also trading based on Bitcoin price, which is something that definitely they have no say in it, right? So that's I think the key factor at the end. Once we have Bitcoin price that starts to ramp up, I think there should be no issue in issuing more common shares and issuing more STR. I think everything might rally, and they might even be able to use the other preferred shares as well to actually accumulate even more Bitcoin. But yeah, right now it's the bear market that is hitting us all very hard.
Yeah, it really is. And I do wonder, how, like, I wonder if the Saylor thinks that, how is the team at Strategy thinking about how the market reacted to them buying back those converts at a, so-called discount, I guess. Like, was that just a signal at the end of the day? Like, hey, we can do this type of thing. We can, raise money, reduce our runway on dividends, reduce the USD reserve to pay converts. Because like ideally, like there is an aspect of, you don't want to telegraph to the market exactly what you're doing at all times, right? Because then short sellers can step in and when they know the MSTR common is getting hit with the ATM because they've got these notes due. If you're really predictable in the way you're raising capital, I think that's just going to hurt common shareholders a little bit more. You want to be transparent, but I think you do have to have like a little bit of veil of you know a shroud of secrecy in how you're actually operating things behind the curtain. So I do wonder now how the team's thinking about it. I'm curious, Chase, your thoughts. Do you think they've learned the lesson and they're just not going to do this type of thing with the converts? How much of it was signaling?
Yeah, I mean, you have to ask, like, would they do it again knowing what they know now? Like, is paying off the converts at an 8% discount or, whatever it was, worth making STRC trade, $12 below par and scaring the market and, perhaps extending this bear market to some degree, because just a lot of people are now worried that strategies in some kind of a debt spiral that's going to send Bitcoin, the commodity price, lower. So like, was it really worth it for a convert that I think converts in 2029, right? Like, was this really the time to do that? Why not raise that capital through one of your other instruments in the next bull, which you have to assume is between here and the 2029 convert? So yeah, I mean, I don't really understand the decision. I would love to hear more thinking about it. Like, maybe they have this advanced AI model and they're like, oh, it is 0.05% more accretive to Bitcoin per share if we buy back the converts right now. But it's like, yeah, but then what's the secondary what's the second order effect of doing that and scaring your STRC shareholders and the rest of the players in your stack? Is it really like worth it? And I think that they're going to have to learn to balance what is the right lever on a technical, like this is slightly more accretive to do this transaction versus another, versus what is the second order consequence of that? Does that scare a certain shareholder in the stack to a degree that, you know, slows down our flywheel, which I think is what we saw here. And the fact that they're instantly reversing face to rebuild the USD reserve tells me that they probably wouldn't have made that decision in hindsight, and that they are realizing that, oh no, we do to some degree have to kind of appease the market and not just pull whichever lever we want, because on some cool model that we have internally, it tells us that this is the right lever to pull in this moment in time.
Yeah.
Let me take the counter side on this, because you mentioned that obviously our strategy would be able to issue more shares or STRC, and then obviously build up a cash reserve in a bull, and then they would be able to repurchase those convertible notes during that time. But that's also the time where you would see more volatility, and potentially they would buy back those convertible notes at a much higher price, because now in the bear market, they're not super attractive, and we saw them repurchase them at a discount. So you need to balance these two things out, right? It's not as easy as to say, yeah, we can do it in the bull market. Because again, the pricing of these convertible notes will probably be much higher. So obviously we don't know what those prices would be, but it would be interesting to see if they managed to sell some at that price, to see and be able to compare, okay, they were able to repurchase them at a discount during the bear market, and how much more it would cost the shareholder at the end of the day to repurchase them at a higher price during a bull market. So obviously we won't know until we have the bull market to see that happen, but it would be interesting to see the differences there.
Yeah, I think one point that you're kind of getting at is the reason that MSTR shareholders might have to wait longer than normal to really see the kind of levered Bitcoin returns again is that strategy not only has to rebuild the USD reserve and maybe make it bigger than it even was before they tapped it, but they clearly are on a path to retiring all the converts as soon as they can. They want to it looks to the outside observer that they want to get closer to the Strive capital structure where there is technically no debt. And so that they can have that narrative in their pocket along with the narrative that comes from having, you know, 2 years plus of USD reserve. So that means that there's going to be probably a lot of USD raised not to buy Bitcoin, but to either pay down converts or acquire USD for the reserve of STRC, and that is going to be kind of a drag on what the MSTR shareholders have become accustomed to, which is just massive compounding Bitcoin per share accretion.
Yeah, that's a good point. Sorry, Tyler, just maybe one last point as well for the common shareholder is because we always, or at least as a common shareholder of MSTR, I always think of the expense, or the expense that you incur is basically the dividend of all these preferreds, right? That's on you, but all of this falls back to the common shareholder. But at the end of the day, you need to also calculate this USD reserve, like what's the drag on that? Because as you point out, Chase, it's also coming back to the common shareholder. So the common shareholder has a lot of upside because obviously it's Bitcoin amplified, but also there's a lot of expenses there that need to be calculated. And again, we still don't know what the USD reserve will be, but it would be interesting for a common shareholder to know as well, hey, there's this amount of USD reserve that's going to be attributed for the potential future dividends, and to factor that in as well, because I think that's going to be also expensive in my opinion, considering how the debasement is happening real time.
Yeah, so it's like the question is, does strategy start to give guidance? Because clearly the STRC shareholders would appreciate some level of guidance on the USD reserve, but also the common equity shareholders are basically sitting there now and saying, wait, how long do we need to wait until we start to see all of the capital raising go back to acquiring Bitcoin? Because your actions are showing me that you want to raise USD and you want to pay down the converts. So when does it become about me again? Like I'll sit in the stock, I'll hang on, but give me some level of guidance that like, okay, when we get to 2.5 billion of USD reserve, we're gonna stop, raising USD, or we're going to pay down one more tranche of the converts, but then we have no plans to do so for the near future. Like give the common shareholder some reason to hang on to MSTR stock.
Yeah, makes me think of how much is Saylor looking at Strive, and you put out a tweet about this, I think, in the past week, Chase, about comparing, what Strive's done and Strategy's done, and how, as as a strategy shareholder, you want, Michael Saylor and Fong to basically learn from, what the team has done there. I do want to run through and kind of like just look at the timeline of, what Strive has done. I'm just going to share my screen. Put a little prompt into Grok to make sure I didn't miss any highlights as I run through this. But so Strive, they've been they're an ETF manager, they're a fund manager, and their whole kind of business from the get-go was trying to say all this DEI ESG stuff that's associated with stocks. We're not about that. The whole point of capital investment is to make a return on your capital. But so it was last year in 2025 they went public, and they started their Bitcoin Treasury strategy. They had a pipe deal. That was the initial funding. They issued warrants, and there's still some outstanding warrants. I think 600 or 700 million maybe have gone unredeemed at this point, so to speak. But like to me, Strive has just hit all the beats since they went public, right? They were able to raise, a lot of money in this pipe deal. Some of those pipe deals, were, there was such a frenzy trading around these. MNAVs were bloated, and there was no way to really properly value these companies, or, unless you had a crystal ball to see, where Bitcoin's price was going and where sentiment, eventually has kind of ended up, with them trading, down in a lot of cases below their Bitcoin NAV. But strategy met with a team of Semler Scientific at the Unconference last year. A few weeks later, boom, they announced a merger deal, and that really allowed Strive to really scale up their stack. I think that got them over 7,000 Bitcoin by the end of the year once that merger was complete. And then they're like, okay, we're gonna launch the prefs. Or the pref. We saw Michael Saylor's model of what worked. STRC was clearly like the the iPhone moment for strategy. We're going to do that, and we're going to do it better, Matt Cole said on my podcast. Famously, there's clips of him saying, we've got the capital stack that strategy wants, in 5 years. And yeah, like that was just like a big moment. They IPO'd SATA. Since then, it's been crazy what they've done, right? They cleaned up their balance sheet. They got rid of the legacy debt on Semler Scientific. It took a little bit for SATA to ramp up and get to par, but they were able to, raise, a couple $100 million when that went live, buy some more Bitcoin. And, now we're sitting today. They've completely cleaned up the balance sheet. They were the first company, they heard strategy was going to twice monthly dividends. They went straight to daily dividends. Like they're just hitting all the beats. They were the ones, they're like, oh, we're going to do this 18-month runway and we're sticking to it, which is different than what strategy's done deploying their cash. And now it seems like with every raise they have on SATA, they're kind of proportionally cranking up that 18-month runway and really signaling like, hey, we're serious about this 18-month number. Maybe they change it, maybe they offer different guidance in the future, but for right now, I think they're like taking the market signals. The preferred is performing well. I would say it's holding up better than STRC, like we've talked about today. But just to see a company like that hit all the beats, is that a model that's repeatable for other Bitcoin treasury companies? Is what can Saylor apply and learn from, I guess, the messaging that Strive has, put into play? I don't know how closely you've been monitoring them, both of you guys, but like it does seem like like they also acquired True North, which that's not necessarily like a revenue generating business by any means, but it Jeff Walton was on there with his crew, Ben Workman, Tim, and all those guys like Soleil, Grain of Salt. Like they're talking about the industry, they're talking about strategy. That's what it began as, just completely talking about strategy. Now they also talk about Strive a little bit in the broader Bitcoin and Bitcoin treasury space. But like that was a really neat thing. they brought Jeff Walton on. He's got a background in reinsurance and risk, but like he's also just like amazing at talking about these stocks, right? And talking about MSTR and like analyzing, breaking down Saylor's every word, right? Like every week he's getting on this call and breaking down exactly what Michael Saylor is talking to. So I think they've made like just so many intelligent decisions there. Yeah, what can the broader space and strategy specifically learn from what Strive's been able to do? Because it seems like the execution's been awesome.
The way I like to analogize this is like Saylor and strategy saw a mountain and they were like, I think we can get to the top of that. Like, let's start climbing. We'll figure it out as we go. And Matt Cole and Jeff Walton and Strive were sitting at the base and they're just like watching Saylor do all this crazy stuff, pull out all this new gear because he needs to get over this ledge. And he took the long way around this way. And he just like, eventually Saylor was the first to the top of the mountain, but my God, like that was not the most efficient path. And now Strive is sitting there and saying, okay, so we know you can get to the top of this mountain. Now they're doing what like a professional rock climber would do, where they're charting out the exact most efficient path. They're like, okay, we're gonna take our right hand on this crevice. We're gonna need this much amount of rope and only this much amount, this much food to get to the top because we don't wanna carry any more than we need to. And so they're just like looking at the mountain, having the benefit of having stood at the bottom of the mountain, watched Saylor do everything right and everything wrong to get to the top. And they're just charting the most efficient path to the top of the mountain. And so, yeah, SATA has the most efficient structure for this. They have taken the most efficient steps, but it is all to the benefit of them for having seen strategy be the innovator at how to climb the digital credit mountain. And so there's not really a way to go back. Like strategy can't go back and rechart its path. Yeah, it has some dead weight in the balance sheet now. It has some things that it brought with it to the top of the mountain that it thought it needed that maybe, in retrospect, it realizes we didn't need this pitch and shovel. We didn't need an extra 200 pounds of rope. We got to the top. We're the first to get to the top. We'll always be the first to get to the top. But we've got all this extra weight now that we need to start throwing over the ledge little by little, while Strive is just repeating the path, but in the most efficient route. And so that's kind of how I like to see what's going on here.
Yeah. To extend the analogy a little bit, I guess like it's like, as we're kind of bottoming in this bear market, now Saylor's made the trek downward and he gets another crack at it, right? And he gets to see, learn from his mistakes or learn from their journey. I would say, I don't think they've made like major missteps, but there's a lot of, this is uncharted territory, and now there's like you say, a kind of a different path that's been blazed, or a different trail, so to speak. And I think, yeah, Saylor and team have like a way to like further, make it more efficient. Maybe there is a path that's even greater and bigger, and maybe they can reach new heights in this next market. So it'll be really interesting to track and to monitor. Yves, what's your take on what I guess all the beats that Strive's been doing?
Yeah, I mean, but it's like in general in history you see this pattern repeat itself, right? It's like in any sports. Why do records keep being broken? Is because you have obviously like the first mover can never do the thing the most efficient way, but then there's somebody else that figures out, oh wait, I can get some supplements, or I can do this type of exercise to exercise this muscle specifically, and things like this. And then that's why you see also high performance in sports, always higher performance in sports. And actually I tend to see a little bit the same in the Bitcoin treasury, right? When we're commentating, sometimes I feel like a sports commentator on strategy, Strive, Metaplanet, and then who's getting to the top of the Bitcoin Treasuries.net ladder, all of this. So it's a bit like a sport in a way, and you see it very well also in the company, right? Obviously, some of them have innovated in different paths. So Strive is definitely following strategies lead because they're in the same jurisdiction. But Metaplanet, for example, again, they're in a different jurisdiction, so they cannot play by the same rules. They have to also innovate in their own way. They cannot just be like following strategy. So that's also interesting. The same for Capital B in Europe, right? They have to find their own path. And although they're playing the same game, there's still different rules that they need to abide to. So that's also going to be interesting to see how every company kind of adapts to the different rules that they have, right? So yeah, it's in I wouldn't be surprised to actually see a US company eventually that comes and then they do something even more efficient than Strive at some point, right? I'm not saying it's going to happen within the next few years, but maybe within 5 or 10 years, they have something new that nobody thought of. They come and they start accumulating like crazy Bitcoin. So yeah, it's going to be super interesting to see the coming years as this space evolves, because again, we're super early here. We're like, what, a few years in, we haven't seen all the innovation that can come out of these companies.
Yeah, it's definitely a competition, and I'm glad that folks in the space are starting to look at it that way. I mean, when it was just strategy and just STRC, it was this novel thing, but now it is a legitimate accumulation race. We've seen enough signals from SATA's performance against STRC in the last few weeks to say, no, there are moments in time where SATA might be running faster than STRC, whether it's the higher frequency of dividend, the ability to stay closer to $100 par, the balance sheet, the fact that this week they technically bought more Bitcoin than strategy at Strive. So, I mean, this is a competition to some degree. Bitcoin Treasuries.net is like the leaderboard, right? It's a leaderboard for a reason. This is a competition because there is, at the end of this, a finite amount of Bitcoin. There will be one leader. Many assume that it will be strategy. It'll be very hard to try to lap strategy at this point. But on a step-by-step basis, Strive is more efficient right now. They are setting kind of the new record pace.
Yep. Well said. I think you're right. And, there's been a lot of criticism of, Saylor and the teams behind all the Bitcoin treasury companies, Strive included right now, from Bitcoiners that we've talked about. Again, I don't want to dive into it too deeply on this show, but people criticizing like, oh, these aren't pure Bitcoin purists and whatnot, and that's fine. But like, once the whole race, comparison, Chase, has me thinking, once more people see what strategy are doing, once we have another bull market and Strive has daily dividends, right? That's going to be the talk of the town eventually. Like, people are going to be saying, hey, there's this dividend that's paid out 250 times, 500 times, 500 trading days in a row, and it's backed by Bitcoin. There's going to be other companies that are going to come in that have no background with Bitcoin whatsoever, that definitely aren't going to go down the rabbit hole that Saylor went down, that aren't going to go the rabbit hole that Matt Cole and team went down. And there's going to be a lot of hate from Bitcoin, the purist community, when there's more and more companies that adopt this strategy, and they're even more distance from the ideology behind Bitcoin, and they're just making a pure financial play because they've seen it work for somebody else.
Yeah, I mean, if you stick with the race analogy, it's like Saylor just started running, and people are like, what is that guy doing? Like, it's not a race yet. It's just weird. That guy just started running that way. And then Strive starts running after him. And now people are looking around, they're like, am I supposed to be running? Like, is this a race? Are we in a race? Another thing that I think is interesting is this idea of amplification that has kind of become the term that we use in regard to these companies. I think it'll be really interesting to start tracking amplification levels against like anti-Bitcoin treasury company sentiment, because it seems like the more amplified the companies are, the more the amplification in Bitcoin Twitter gets, the more amplified the Bitcoin OG cold storage self-custody only versus Bitcoin treasury connoisseur folks, or as Saylor calls it, the Bitcoin capitalists. Like, I think it'd be really interesting to track amplification levels against kind of the vitriol amongst the two bases in the Bitcoin world.
Yeah, we'll have to add that as one of our metrics that we track on the website, Chase. I do want to, before we leave, speaking about the race to accumulate more Bitcoin, just hop over to the site actually, and looks like SATA is trading almost to $97 now. Yeah, one of the articles today that Miller Cole had was talking about Adam Back's BSTR. And I speculated that this is probably, it's nothing new that I invented, but this seems like it's going to be a vehicle to take Blockstream public at some point, hopefully sooner rather than later. But right now, for anyone who, might not have been here last year and followed all these, the explosion in Bitcoin treasury companies. A lot of these companies went public via a SPAC, a de-SPAC transaction, which is essentially, there's this company out there that has a blank check that they acquire investors, and then that company is already public, has all the necessary shelf registrations and all that. In some circumstances, writes a check and acquires a private company. So it's a way to basically get around the IPO roadshow whole thing and save some money on the back end in legal fees to take your company public. So that was a way a lot of these Bitcoin treasury companies spun up, and some did it really successfully. BSTR, it's trading under CEPO, the Cantor Equity Partners SPAC. This one's taken a while to close, and I just want to make sure I have my figures right here. So basically, they've signaled Adam Back's company that they've got 30,000 Bitcoin essentially that they're going live with, and they raised a lot of that in the last bull market. But they're going to be getting, a couple, they're $1.5 billion. Once this gets approved, which it's on target to be voted on this Friday, I don't see any reason it wouldn't go through. I'm sure all the shareholders are aligned and realize that this thing will probably trade up if the transaction goes through. I imagine a lot of Bitcoiners are the shareholders of this blank check company. Anyway, at this point, and Samson Mao tweeted, quoting our tweet about the merger, is he predicted that Adam Back wouldn't be able to deploy the $1.5 billion from the de-SPAC below Strategy's average cost. But, it's definitely looking like he's wrong. If they can get, this cash turned around and buy Bitcoin at, in the low 60s, it's crazy that they're going to get like just such a low cost basis. I mentioned that I was talking with their chief investment officer, Sean Bill, on one of the roundtables I do, and he says, it's like wasn't really necessarily something we planned to get the deal done this long, but being able to buy the dip is just like a huge kind of coup for them, and it's just amazing to get so much more Bitcoin than they otherwise would have for $1.5 billion. So be really interesting to monitor that company. But that Samson says, at today's prices, when he tweeted this the other day, that's an extra 23,500 Bitcoin, and they'd come to market at 53,500 coins. So I mean, that's a lot of cheese. I think that's going to make a lot of companies envious. And what do you think? Do you guys have any thoughts about BSTR and they've signaled they want to do prefs. They've signaled they want to do some M&A. Are you betting on Adam Back? Just like not investment advice, but like what's your take of where they sit in the whole conversation?
I mean, my first impression is timing Bitcoin is so interesting because that when they started down the path with BSTR and Bitcoin was starting to run to all-time highs, that they were probably thinking, oh man, I wish we could get in right now at 120 because we're going to 160 and 180 next, and then here they are, timing works out where they're probably going to be able to buy in at lower than Strategy's average buy price, as the note there from Samson says, which I believe is what, like 74K-ish, is that right?
Yep.
For Strategy?
Yep, 74, 75.
Yeah, so super interesting how the timing works out. I'm sure that they thought it moved too slow, but here they are, and they're going to be able to take advantage of it. As for Adam Back, I mean, I do expect them to acquire Blockstream. Similar to 21 and Jack Mallers, where they can't say it out loud until after the fact. It was kind of pretty obvious when you choose the CEO of an existing operating company that probably that company is going to be part of the transaction. Will this put them, if they do get the 53,500, does that put them in the number 2 spot above 21?
Yes,
Right.
That would put them number 2.
Right. So a significant position out of the gate. And if they do use that Bitcoin collateral to issue prefs and they have some kind of an underlying operating business that's cash flow positive, you can almost think of that as like an iteration of Strive, to Yves' point, where it's like maybe this is an even more efficient version of Strive coming to market, issuing digital credit not only with a larger capital base of Bitcoin, but a positive free cash flow producing operating business underlying it that can make good on some percentage of the dividend obligations just from the free cash flow. So, if there is a next iteration of the efficient digital credit company, I do think it is one that has positive free cash flow. And it looks to me like BSTR wants to be that. 21 with Mahler's could have tried to be that, but he seems very against the issuance of digital credit and prefs. So it looks like BSTR could carve out enough differentiation to justify a spot in the big three with Strive and Strategy here in the digital credit race.
Yeah. Yeah. And that nominal stack size in Bitcoin matters, right? Because we talk all the time about optionality, the optionality that your stack gives you. Yeah, you can underwrite a lot more in preferred equity. You can underwrite a lot more in M&A activity. You're going to get better terms on loans. All of that. There's just more interesting ways they can deploy. Any thoughts on BSTR, Yves? And I guess a secondary question to that is, if you're an investor sitting there, like, how do you invest in a Bitcoin treasury company after, having seen what happened last year? What becomes investable for a retail investor, without, knowing where things are going to go? It's like you want to see some track record first, right?
Yeah. So maybe to your first point, so I actually watched your episode with Sean Bill, and that was super interesting. I thought looking at BSTR as a whole, and as Chase pointed out, I think it's quite obvious that they will have a block stream underneath that, and I understand that's also cash flow positive. So definitely a strength. Because we talked a lot about the USD reserve, but if you have a cash flow positive business, then the need for a USD reserve already kind of lowers, and that's a great way to do it, because at the end of the day, this USD reserve is really a drag. So having definitely a cash flow positive business that upsets a little bit this USD reserve is great. So quite bullish on BSTR. As an investor, I am very, very cautious, especially after looking at what happened last summer. So I've always moved very, very slowly. So again, not financial advice, but I've always moved very slowly, and I'd really like to understand fully the investment before I get into, right? So strategy was quite straightforward. Quite straightforward. Quite depends for whom, but after learning about Bitcoin, I think strategy was quite straightforward in what they were doing, because they're laser focused in one thing and one thing only. They've always mentioned communication with Saylor has been fairly clear from the get-go. Then MetaPlanet has been also very good with communication. So also another thing that in my opinion, after studying it, I felt comfortable with. And obviously the third one, Strive as well. Communication has been on point to say the least. BSTR, I haven't heard much from them, right? So for me here, communication is lacking. I would like to hear more. I guess that's going to happen once they have the vote now coming this Friday, right? Or next Friday. I expect that they would communicate more, but then after that, I really want to understand what's their going in position. And as long as I don't fully understand it, I'm not going to allocate anything. That's very clear. And potentially, even if I understand it, I might not, who knows. But for me, one thing, and that's again, not financial advice, but if you're going to invest into something, make sure you understand and make a lot of research on it. I guess here, all of us, as Chase pointed out, I think last week or a couple of weeks ago, we're doing it to a point that it's unhealthy, but that's what we like doing, right? Probably not to that extent, but definitely do your own research.
Definitely.
One thing that Yves said there that's interesting is he raised MetaPlanet, and I mentioned the big, like, maybe BSTR can carve their way into the big three of the digital credit race. And just to be clear, like, obviously MetaPlanet, I think, qualifies as a big three in the Bitcoin treasury space, but in digital credit, they're playing such a unique arbitrage in the Japanese market and against the interest rates there that their credit, their rates will never be attractive, in my opinion, to US based or global investors, right? They're playing a very particular game that will be very efficient actually for the common shareholders because the hurdle rate, the effective hurdle rate of the obligations in the Japanese market are much lower than SATA's 13% or STRC's 11.5%. But because of that, I just don't ever see them as a global digital credit issuer. I think they're playing a very specific game that is kind of sealed off to the Japanese market, whereas BSTR is going to be a US liquid instrument and clearly has ambitions for being in that digital credit race.
Yeah. Great framing. Yeah, it's going to be really interesting to monitor. And yeah, Metaplanet is just going to always be hamstrung by, operating in the Japanese market, but it's great for the Japanese market. Certainly like being able
maybe
to.
one point to Metaplanet again. Sorry, Tyler, to
Yeah.
cut you off. Just to add on, because I mean, obviously we assume that they will be in the Japanese market, but there's been also rumors that they might actually be issuing prefs in the US market, right? So they might have this dual lever that they can play with the low yields in Japan and the prefs in the US, and I think that's an interesting play as well, if they can manage to do it, obviously, because they've been setting up shop in the US. So I wouldn't count them out from the US yet. I'm not saying it's going to happen. Again, this is purely speculation. But if they do it, that would be super interesting as, again, a treasury speciality or uniqueness on a Bitcoin treasury. So to be on the lookout. Again, not financial advice, do your own research. And again, this is purely speculation, but there is something going on in the US.
Yep. Yeah, and I can't wait. I was thinking during these closing words from you guys, there's going to be a crop of people who just got into the Bitcoin treasury trade during this bear market, and they probably were invested in tech and AI, in silicon, and they were like, oh, here's this Bitcoin thing, here's this Bitcoin treasury thing, and they've been able to see the whole playbook, and it's like they got all the gains from AI, and now they're buying really deep value in Bitcoin treasuries, and I'm sure we're going to see some influencers pop up here in the coming years that we'll get to talk to that are really excited about the trade they made, and they're going to be the next evangelist for the upcoming cycle. So really excited to monitor it. Thanks everybody for strapping in. I didn't jump to the comments much, but Sandeep Star, our #1 commentator, was in there saying STRK is the best. Thanks for tuning in, buddy. He said he bought more yesterday. He's buying more Stride today. Again, not financial advice, but maybe he took a page from your playbook there, or your dad's playbook, Chase. Thanks for joining us, guys. We'll see you all next week with the Bitcoin